Welcome back to the deep dive. Today, we're really digging into the latest financial report from Parker Hannifin Corporation, an industrial giant.
Yeah, definitely a big one.
When you think about Parker, maybe think of them as the hidden heroes behind the machines. They don't make the final product, the car or the plane, but they make the critical parts that make those things move right, flow right, and just work reliably.
That's a great way to frame it. They're fundamental.
Exactly. A Fortune 250 company, global leader in motion and control tech. I mean, they've been enabling engineering breakthroughs for, over 100 years now?
That's right. And for this deep dive, we're working directly from Parker Hannifin's detailed report. It covers their fiscal 2025 fourth quarter and the full year results. They just put this out August 7th, 2025.
Fresh off the press?
Pretty much. And it really gives, I think, a fascinating look at how a major industrial player like this performs in, well, what's still a pretty dynamic global environment, lots of moving parts.
Right. So our mission today, as always, is to pull out the most important nuggets here. We want to understand the performance, sure, but also what's driving it. And, what does it all signal for industrial tech going forward?
There's a lot to unpack there.
Definitely. Expect some surprising facts and key insights today. Okay, so let's start big picture. Parker reported a record year for fiscal 2025. That's the headline. When you look at the full year results, what immediately jumps out?
Well, it's not just the size of the numbers, though they are big. It's really the quality of the performance, I'd say.
Okay.
So for the full fiscal year 2025, total sales hit almost $20 billion. $19.9 billion to be exact.
Nearly $20 billion. Wow.
Yeah. Now, organic sales growth, that was 1%.
Yeah.
Just quickly, organic growth, that tells you how their core existing businesses are doing, stripping out acquisitions.
Right, the underlying pulse.
Exactly.
Yeah.
But the real story, I think, is what they did with those sales.
Yeah.
Their profitability just soared.
So how much are we talking?
Net income jumped to 24% to $3.5 billion, or $3.6 billion on an adjusted basis, which was up 7%.
Okay, and adjusted. That's usually taking out one-off items, right? To see the core earning power.
Precisely. Things like amortization, maybe some restructuring costs. It gives a clearer view of the ongoing operational performance. And this flowed right down to earnings per share, EPS. That hit $27.12, also up 24%, and a record $27.33 adjusted.
Record adjusted EPS.
Yeah. And another really crucial piece, cash flow. Cash flow from operations was up a strong 12%, hit $3.8 billion. That's 19% of sales.
Very healthy.
That is an exceptionally strong set of numbers. And I saw the chairman and CEO, Jenny Parmentier, she highlighted records in safety, engagement, EPS margins, and cash flow. She also mentioned the WIN strategy.
Right.
What's the significance there, especially connecting it to that strategy, given, net income jumps 24%, but organic sales only 1%? How did that work? That's the key question, isn't it? Her statement really underlines that it's not just about top-line sales growth. That huge jump in profit with modest organic growth, that screams operational discipline. Efficiency.
Okay.
It means Parker's mastering cost control, maybe they have some pricing power, or perhaps just a really profitable mix of products right now. She specifically said, delivering strong margin expansion and earnings growth in a dynamic macro environment is a testament to the resilience of our portfolio and the power of our business system, the WIN strategy.
So that WIN strategy is their playbook.
Think of it like their internal operating system, yeah. Covers everything, lean manufacturing, supply chain, how they run the business day to day. It's not just buzzwords. It's clearly the engine that let them boost those margins and deliver record earnings, even when the market was, dynamic.
Controlling what they can control makes sense. And beyond generating that, $3.8 billion in cash? What did they do with it?
They talked about balanced capital deployment. So a couple of things. They increased their quarterly dividend by a solid 10%.
Good for shareholders.
Definitely. And they also repurchased $1.6 billion of their own shares over the years. So they're boosting efficiency inside the business and returning cash to shareholders, a balanced approach.
Okay, so a record year overall, but that often comes down to finishing strong. Let's zoom in on the fourth quarter, Q4. What specifically drove that powerful finish?
Yeah, Q4 really cemented the record year. Sales were a record $5.2 billion. Organic growth in the quarter was a bit higher, 2%.
Okay, picking up slightly.
Right. Net income was up 18% to $923 million, or $992 million adjusted, which was up 12%. EPS jumped 19% to $7.15 and hit a record $7.69 adjusted. up 14%.
More records.
And the margins, segment operating margin expanded nicely, up 170 basis points to 23.9%. Adjusted margin up 160 basis points to a really strong 26.9%.
Just remind us, a basis point is?
Oh, right. 1/100%. So 170 basis points is a 1.7 percentage point jump in profitability. Pretty significant.
Got it. So strong Q4 numbers, and they bought back a lot of shares in Q4 too, right? Yep. $851 million.
They did, yeah. Ramped up the buybacks in Q4.
But here's where it gets, I think, really interesting strategically. They also announced a deal to buy Curtis Instruments, Inc. So how do these things fit? Buying back shares, returning cash, but also making an acquisition. What's Curtis Instruments about?
That's a great point. It really shows that balanced capital deployment in action. It's not just one thing. The Curtis Instruments deal is clearly strategic looking forward. It directly expands Parker's offering in electrification. And electrification is, it's a huge growth area within motion and control tech. Yeah. Critical. So they're buying capability, positioning for long-term growth there.
Investing in the future trend.
Exactly. But then returning significant cash through dividends and those big buybacks, that signals confidence. Confidence in their current profitability, their current cash generation. It's like a strategic dance. Invest for the future, reward shareholders now. Shows a lot of financial maturity, I think.
Okay, those overall numbers, impressive. But like we always say, the real story, the health of the business, is often in the segment details. So, Q4. Break it down for us. What did the different parts of Parker's business look like?
Right, the segments tell different tales. Let's start with Aerospace Systems.
Okay.
This segment was really flying high. Sales up almost 10%, 9.7%. Organic growth was 8.6%. Record sales there, driven by what they called continued aftermarket strength.
So repairs, spares, that kind of thing.
Yeah, exactly. Very profitable business. And speaking of profit, they hit a record-adjusted segment, operating margin of 29.0%. Just wow.
29% margin, yeah. Incredible.
And their aerospace backlog, also record, $7.4 billion. Orders for the segment were up a strong 12%, with both commercial and defense looking good. So aerospace is clearly a powerhouse right now.
No kidding. Okay, what about the industrial side? That's split by region, right?
Correct. Diversified industrial segment. First, North America businesses. Here, sales were actually down 6.9%. Organic sales growth was negative 1.4%.
Okay, a dip there.
But, and this is really interesting, despite that sales dip, they achieved a record-adjusted segment operating margin of 26.7%.
Wait, sales down, but record margin? How did they pull that off?
That's the efficiency story again. Incredible cost control. They did note seeing gradual, broad-based improvement across market verticals. And importantly, order rates were positive for the third quarter in a row, up 2%. So maybe signs of a turnaround starting.
Fascinating. Okay, what about industrial outside North America?
Right, the international businesses. Here, sales were up 4.3%, with organic growth just positive at 0.6%. They also hit a record-adjusted segment operating margin, 24.7%.
Another record margin.
Yep. The organic growth picture was mixed by region, though. APAC was up 6%, Latin America up 4%, but EMEA, Europe, Middle East, Africa, that was down 3%. And overall, order rates for international were flat compared to last year. Maybe cover comparisons there.
So really different stories across the board, but the margin performance, especially in North America industrial, despite lower sales, that's genuinely impressive. What is the secret sauce there? Is it just that win strategy?
I think that's a huge part of it. It really comes back to operational excellence. When sales dip, margins usually get squeezed, right?
Usually, yeah.
But Parker's ability to manage costs, optimize the supply chain, maybe get better pricing in certain areas, it allowed them to actually expand profitability. It really speaks to discipline management and a very agile system.
You mentioned the order rates for the segments. Those are often a good leading indicator, right? What about the overall picture for Parker's orders?
Yeah, definitely key for looking ahead. Overall, Parker order rates stayed strong in Q4, up 5% year over year. They credit their transformed portfolio for that resilience.
Okay, 5% overall.
Right. So even with the mixed picture in industrial, where order rates are positive, but maybe not booming everywhere, the overall number is solid. And aerospace orders, again, up 12%, just really strong, signaling continued demand there.
Okay, so that covers where they've been, what drove the record year. Now let's look ahead. What's Parker Hannifin forecasting for the upcoming fiscal year 2026? What's the outlook?
Right, the guidance. For the fiscal year ending June 30, 2026, they're expecting total sales growth between 2% and 5%.
2 to 5%.
Yeah. Organic sales growth, they expect about 3% at the midpoint. Now, that forecast includes about a 1% negative impact from some businesses they sold off, divestitures.
Okay.
And they expect a positive impact from currency exchange rates of about 1.5%.
Right.
So you factor that in to get the 2-5% total growth.
Got it. And profitability, EPS, margins.
For adjusted EPS, they're guiding to a range of $28.49 to $29.40. And the adjusted total segment operating margin, they see that between 26.3% and 26.7%.
Yeah.
Still very strong margins.
That feels, I don't know, maybe cautiously optimistic after such a huge year. Jenny Parmentier, the CEO, kind of echoed that. She said, looking ahead, we expect aerospace to remain our fastest growing business and see a return to positive organic growth in our industrial businesses. She also reiterated being great generators and deployers of cash.
Right.
But given that guidance range, maybe 3% organic growth at the midpoint, and thinking about those flat international orders, the dip in North America industrial sales last quarter, are there maybe some headwinds or risks baked into that forecast?
That's a really sharp observation. I think cautiously optimistic is a good way to put it. That 2-5% sales growth, while solid, isn't the explosive profit growth we just saw.
Right.
So yeah, it's just management is being pretty pragmatic about the wider economy. Expecting that return to positive organic growth in industrial is key. They clearly believe those segments will stabilize and recover.
But maybe not roar back immediately?
Perhaps not. The recent flatness in international orders, the previous NA dip, it suggests some markets are still navigating choppiness. So the forecast likely builds in some continued volatility. But, and this is crucial, they seem very confident in their ability to keep expanding margins and use that win strategy to find gains, even if the top line isn't setting the world on fire. It shows faith in their efficiency, their resilience.
Okay, so let's try and wrap this deep dive up then. Parker Hannifin clearly delivered a landmark year in fiscal 2025. A really powerful Q4 finish helped seal that deal.
Absolutely.
Driven by, well, smart strategic moves like the Curtis Instruments acquisition for electrification, that soaring aerospace segment with its huge backlog, and maybe most impressively, this incredible knack for boosting margins even when industrial sales were softer. Plus, those positive order signs emerging in industrial.
Yeah, you summed it up well. And Parker's performance, I think it tells us a lot about the broader industrial landscape right now. It shows that even when things are complex, dynamic, companies with the right portfolio, strong operational discipline like that win strategy, and a clear focus on where to invest their cash, they can navigate it, not just survive, but achieve record results.
A testament to adaptation and efficiency.
Definitely. Adaptation, efficiency, and smart bets on growth areas like electrification.
Absolutely. Which leaves you wondering, Parker Hannifin's been enabling engineering breakthroughs for a century. They're clearly leaning into electrification. So what new frontiers do you think motion and control technologies like theirs might unlock for all of us in the next decade? Something to think about. Thanks for joining us for this deep dive.